Okay, just I'm not going to use my trading view today. My trade station. I think it's easier for you guys to see my trading view up here. Okay, how's everyone doing? All right, let's get started here. Let's get started. Okay, the room's just starting to fill up. Okay. All right, so good morning, guys. This is Navin Prithyani from Forex Watchers. Just want to start off with saying thank you to FXStreet for having me here. Today's topic is going to be on support and resistance, re-engineered. Okay, we did it last time basically, and we had some cutouts, so we brought it into a two-part series. Okay, so how many of you guys are new here, and how many of you guys have been here before? All right, been here a few times. Some are new, some are old. Hi, Matt. How are you? Okay, good, good, good. So, how many of you guys were here on the last webinar? All good here, buddy. All good here. Okay, excellent, excellent. So, let's touch base on support and resistance. Let's just dive straight into it, and then I'm going to quiz you guys. Yes. Be very, very fearful. Okay, so let's jump in here. Now, from where we last left off, and one of the most important things that we were discussing is it's very important to do your basics properly. Now, support and resistance is as basic as it's going to get, and yet everyone does it incorrectly. Literally everybody that I know of. Okay? And why is that? Well, because obviously it's the basics, right? Who wants to waste time on the basics? You know, if I gave you a keyboard and started to tell you to practice typing and you don't know how to type, and I only tell you to type 2 letters, you're going to be like, you know, what's wrong with this guy telling me to type 2 letters? You know, let's get into the good stuff, right? So the basics are very, very important, and most people brush over it. Now, I'm going to draw something here, and you guys are going to tell me if my support and resistance is correct or incorrect. All right. If I do this, is that correct? Is that my support? Okay. There are some no's there. Okay. What and why is that incorrect? Okay. Some people saying probing, it's not touching the body. I believe SNR is more of an area, not a single line. Okay, more than one touch is needed. It's price hunting. Okay, so you see, something as simple as support resistance has like a billion explanations, right? It's not as simple and straightforward as it's supposed to be. Okay, if I take more than one data, like 2 touches, and if I do it like that, some of you guys are saying body. Some of you guys are saying, okay, maybe it needs to take the tail. Some of you guys are saying it's both. It needs to be an area, so it's all of that stuff. Okay? Obviously, I teach this also, that it could be an area, but which one is the right answer? Okay? Just because it's touched here and here, does that make it valid? So I'm gonna give you guys a technique that I use to teach my students on how to know how support and resistance works and where are we going. Now when I draw my support here, support and resistance to a certain extent can give you information about the future, and I'm gonna show you how. Okay, you take your line, you plot it on your first support. Okay, would we say that's our first support up there before the market started collapsing? right? We're going to start from up here, and we're going to work our way all the way down, right? Everyone see this orange line? Okay. Market goes down. Does it break the support? Okay. Whenever you're breaking support, you're basically saying a downtrend is active, okay? Or a downward move is active. Okay, so that means the downward move is active. It's going down, it's going down, it's going down. It halts. I'm going to move my support to the where it halts. Did we break support after that? Okay, it broke support after that. Let me bring down my support to that guy. Okay, so it stalls here. It fools around in this area, but it didn't recover all the way, did it? Okay, you would like a large candle breaking in SNR level. Leonard, we'll go over that. We'll go over that. Okay, it didn't break it. And then later, what happens? The market resumes, starting to go down lower again. Okay, once it goes lower, let's see, that means the market is still active in a downtrend. It's breaking my supports every time I move it to the next struggle. Okay, now it breaks it again, move it to the next one. This keeps telling you the downtrend is active. Because how do we trade downtrends usually, right? A downtrend is, it's a down, and when it pulls back, we're like, okay, we need to sell that thing. That's how we trade downtrends, right? When it comes down, let it pull back and sell it. It comes down, let it pull back and we sell it, right? And, supposedly support and resistance hold like this, right? So that's the general concept of trading in a trend, is let it pull back so we can sell it. So in this particular case, now, does this support move? Did it break the support here? Now here's the tricky part. It's a fake out. Yeah, very good, Raymond. So it's a fake out. It tried to break it, but then he jumped right back in. All right. And then the next guy, he tried to break it. He jumped right back in. When you see this stuff going on, look how support suddenly becomes resistance. Okay? Okay, or it becomes support onto the other side now, basically. Because now it's not going through anymore, it's holding on the other side as it's still as support, but now to help you to do a buy rather than a sell. And yet, once again, it holds. Right? So most people, when they do support resistance, they just want to connect dots. It's like, okay, that's a trend line. My support is going to be like, that's my support, connecting all those four dots to the best as our ability. So it's not a connecting dot game. This is not preschool. So we need to stop connecting dots all the time. Okay, the real support here starts from here, goes straight through, because this didn't hold. He went right back in. So it comes straight across to the other side, and that's why the market held on this side. Right? Something so simple, yet so misunderstood in the market on the internet, right? Yeah, how many of you guys have learned this kind of stuff anywhere else on the internet? It's difficult, right? Now, this changes a lot of things. Raymond, how about using the line graph to draw support? No, I do mostly candlesticks for my webinars because candlesticks is what everyone uses. It's what the majority of the traders use. And professionally speaking, I think a lot of professional traders also use candlesticks. There's a lot more information in it. Okay. All right. So, shall we proceed? All right. You guys are going to now help me with my resistance. Let's say I draw my line here on the top of this guy. Okay? Did my resistance hold or did it break? It held because it came right back down. But just because it held, it doesn't mean it has to be a sell. There's also a concept of a trend line support, right? Which was still also holding. Does everyone see that? Now we'll get into drawing trend lines as well because that's also a support resistance kind of thing. So we'll move that to the side now. We'll bring it in later. Okay, so it held. It popped out. It popped back in, but it still had a higher low sequence, which is what an uptrend usually does. So it comes up again, and it's like this time it breaks through, and notice how it holds on the other side. Okay, that's what we call a test. Right? Everyone see that so far? Everyone with me? Basic support and resistance in play. Okay? All right. So then the resistance moves higher to the next guy. Moves up to this guy. And does he break it? Does this green candle going up break it? No. What about the next green candle? Okay. It does break it. Now, it's just chopping around here, right? Up, down, up, down, up, down. Well, if you take a look at it, when he broke it, he didn't really come down. If I take it all the way up to the body now, okay, this is the part where it becomes subjective if you want to do the body or you want to do the tail. When he came down, he didn't necessarily come down. He just came down to the body part of it, body part of things. The upper side, if this is the top, he didn't really break out and he kept holding. Now, you got to identify the market was in a trend, which then turned into a range. Okay? And you guys all know how to trade ranges, right? Okay, you know, sell from the top, buy from the bottom, typical thing. Yeah, but how do you know this is a range? If you just look at it blindly, you know, it doesn't look like that's a range up there. It just looks like part of an uptrend. But if you read the market left to right, as if you're reading a book, you will understand it. But if you just stare at a book, you don't know the story. Okay, so always remember that. Read it left to right, piece by piece, and you'll get to know what's happening. So the markets are going in an uptrend, changing into a sideways state, then reverting into a somewhat of a downtrend here. Okay, which then resumes back in an uptrend here. Okay, if you draw your lines correctly, you will know what you need to do. If you draw your lines incorrectly, then your game plan suddenly just changes, and doesn't matter how well you try to trade that idea, if the idea is wrong, all the technical skills after that won't work. Do you guys agree? So it comes down to the very basic foundation. If it's incorrect, the whole plan after that, it can be as complex as you want it. It'll all not work. Okay? The core basics need to be like very, very solid. All right. Now, told you guys we'll discuss trend lines this time too. Draw on which time frame? Whatever is your time frame, Joseph. Whether you want to do 4 hours, 60 minutes, 15, 5 minutes, 1 minute, 10 seconds, you name it. All right. Same thing with trend lines. Now, how would you guys draw your trend lines? Is this a trend line here? Ah, we got some yeses. We got some no's. We got some could be's. Okay, there we go. That covers all of it. We got everything now. Okay. For those of you who said yes, why is this a trend line? Okay, it has multiple touches. Okay. Higher high. Okay. Long-term trend. Bounces off the same trend line. Because when it broke, it resumed the downtrend. Okay, that's counter thinking also. That's also good. Adjacent 2 points can be used for a trend line. Okay. What about those of you who said no? Why is that not a trend line? Not plotted on the bodies. Okay. Yeah, you really like those bodies, don't you? It's like, on a smaller scale, it's not. Okay. All right. Now, there's two sides to this. No higher high yet. Okay. Okay. Fair enough. Now, there's two sides to this, and the answer to this whole thing is no. It is not a trend line. Now, when most people do trend lines, they connect what is visually obvious to the naked eye. Because to the naked eye, this whole sector looks like it's going up. So they try to then connect the dots to the best available possible to capture the entire up move. Okay, what if I drew my line like this? Isn't that an uptrend? What if I drew my line like that? Isn't that an uptrend? Now, I noticed some of you guys saying this one answer that on a lower time frame, on a higher time frame. Well, what about this time frame? Things may be prominent elsewhere, but we're studying this chart. We need to do this chart at the best available as we can. If we understand this chart, we'll understand everything else automatically. But we must do this chart that's visually in front of us to the best of our abilities. Okay? So we're going to go into how to draw these trend lines properly. Now, when I'm drawing, okay, always remember when I'm drawing, I'm not psychic. Okay? What I mean by I'm not psychic is if I bring the market back to where it started, from here, would I know to connect my trend line where we just drew it, how we drew it earlier? I would have never seen that. It's going to dip really, really deep, right? I have to follow the sequence of the market. The moment it makes a higher high, I begin. So here, there's a bottom here. The market's halt here for a bit, and then it makes a higher high. Give me a pullback, I'll connect. There's my first connect there. I connect, and I connect. Okay? He goes up, he halts. He goes up, starts to make a higher high, give me a pullback, I can connect. Okay? Notice I didn't adjust this to cross over it or under it or anything. I respect left to right. Okay? I don't just move it just because, oh, something changed, so I move it. Well, then how would you know when to pull the trigger for a buy or a sell if you keep moving the trend line around? Now, when I bring this information back to normal, notice what we originally connected was incorrect. Do you guys see that? Do you guys all agree? Okay? It's just like a book. Don't skip data. You know, connect where you see as if you're reading the market left to right. Because when the market starts from here, this is how people draw their trend lines. They don't look into the future and be like, oh, I guess that's a trend line. Okay? So when you do it this way, you get an upper edge on the market once it crosses on the underside of this and holds. And that becomes your initial sell. Right? Because it finally breaks through and it holds. Okay, so that appears to be a sell. Same concept happens when you do a downtrend line. You take this part to, after it makes a lower low like that, you connect the pullback that comes in, and then you just extend it out. Anything else is just part of it. There you go. It just touches, goes all the way down. Now, look at that. Holds on the upper side. Now, wouldn't you like to know that your buy begins from here? Rather than if you just draw it for convenience, be like, I guess that's the trend line. Well, then when would you buy it? There? That's too late. You guys get what I'm trying to say? If you draw it correctly, you have an upper hand across the markets because most people don't know how to draw these things. So, and in the Forex market, it's a zero-sum game. Someone has to lose for you to win. All you have to do is know the right information. Okay? And those who draw it incorrectly are just putting money in your pockets. Fair enough? Shall we do some more examples? Any questions so far? Okay, more examples. All right, let's do it. Look, there's more of you saying more examples. Okay, so let's do more examples here. When would you know, for example, your support and resistance? So let's first do our first support and resistance. Which one is stronger? Abdul is asking, which one is stronger, support and resistance or trend line? They're both good. Now, if I tell you one of them is stronger, do you ignore the other one? Because he's weaker, maybe? Okay, so there's no such thing as in the market, one thing is more important than the other. It doesn't work like that. Everything is important. Okay, because the more knowledge you have, then when the market sets up, you know which of your knowledge you need to use. Because you don't have to use everything all at once. When the market sets up, you pull out your toolbox and pull out the right tool at that moment. Okay, they could act as a confirmation for each other. Yeah, but doesn't have to also, right? So let's take a look at certain scenarios of them working together and them not working together. Now, let's go step by step. So here was a support. Okay, here's a support. Market goes higher, pulls back, support moves up. Okay, market goes higher, pulls back, their support goes there. Market couldn't go higher, but pulls back, but holds support. So that's like 2 touches on the bottom, and that's 2 touches on the top. Hey, we got a range thing going on. Once you figure that out, it's like, hey, I can sell that from the top of the range just to the bottom. I don't need to take it all the way down. Remember, I'm not a psychic, but I can take it down to there because at that moment, I know that's the reality. Okay? So, and then what happens? The highs never go higher, but the lows do go lower. It crashes down, and that's your initial low. He holds below it and comes down lower. So the top line, we don't need it anymore, and we proceed following the market. Okay, he goes down, he pulls back, he holds below. Okay, all these are sells. All these pullbacks are sells. Okay, that's a sell there. But notice when he crushed down this time, this red bar here, he went below this purple line and this purple line. The market can choose from these two options where he wants to pull back to. It's up to him. Everyone with me so far? Okay. So I'm going to remove this for now. Once he came down and he pulled back, I'm going to move my line to the next support. Now, did we break below after that and hold underneath the purple line? Well, look at this. A red candle came through. He broke it. Then the green candle held one candle and the next one went right back up. Okay? It was a faker. Okay, he went right back up. But now, as he went right back up, I'm seeing that, okay, if I want to be trying to buy it now, I need to see a higher high. Show me that the buyers are here. Well, he's still holding below this guy that we had drawn before. Look at that. So it's as if it's like a range in here now. And then he breaks below and drops. So notice my line never goes here until he breaks. Once he breaks, then all of this becomes support. This and this. Because that's two lines he broke through when the red line came down. So far so good? Everyone with me? Anyone confused? Moving forward. It breaks down below, holds, breaks down lower, pulls back, holds, breaks down lower, pulls back, holds, lower, pulls back, holds, lower, and now is the interesting part. Now notice I'm using first the tail, but when it comes up, he doesn't go higher high either. That means I can adjust my line to the body because he's still holding below the last drop. Everyone with me? Yeah. So this, whether you use the body or the tail, it's subjective to what the pullback does. When you use the body and it goes all the way up to the body, that means the market's not as strong. When you use the tail and it uses the tail or not even the tail, the markets are strong. Like when I'm using the tail up here, look at that market. Didn't even come up to it. The markets are strong. Okay? So in this particular case, it goes up to the body, it holds, but when he holds, he doesn't make a lower low. He doesn't come down lower low. Markets are starting to weaken up. And that's when you go into a range here, basically. Okay? Then the market breaks out. Once it breaks out, this guy can extend across. Because he needs to hold on the upper side of this now. And these things are the best. I like them when they just turn like that. For me, I really like those. You know, I really like buying stuff like that because there's a lot more energy because they just started. Okay? Now, I'm going to do some quizzes for you guys. So far, so good? And any questions before we continue? A fake out is, the question from Joseph is, what is a fake out? A fake out is when the market goes up, it pulls back. There's your line, right, for resistance. Okay? Then he starts to go up. He breaks above, and it's supposed to become support now. But in fact, he comes back inside. He doesn't use it as support. So this way, it becomes back to resistance. Like that. Make sense? A fake out is this move is not real. Okay. So let's proceed. Let's see how good your eye can catch stuff now. Is this correct resistance? When two highs are touching together, are we in a trend? Okay. Well, are we really in a range? Yeah. Two highs does not mean a range. Look at this. Would you say that's two highs right there? Would you say that's a range? Yeah, you got to wait for that confirmation to make sure the bottoms are also holding. That's when you know it's a range. So now when I look at this stuff here on the 4 hours here, I see this is my top here, my resistance. Here's my top here. And if I extend it out to their holding still, notice it goes out, but that's a faker. He comes back in. If I see this pattern happening again and again, then I would love to sell it when it comes up again. Okay, on the bottom, this was the lowest point. Okay, he popped out, but then he held below for a bit. So I'm going to move my line lower. Okay, and then he went straight across. He held again. He went straight across. He actually held again with the tail there. But then he couldn't go back up. He just collapsed. Okay, so lots of opportunities for trades in here. A lot of your trading systems, if it's a trend trading system, you draw your lines perfectly, you'll know that you can't do that system yet. Put it on hold. If it's a range trading system, you know that the range is now active. Turn on that system and go all in. Well, don't go all in, but you know what I mean. You know, start trading. Okay, because a system cannot identify properly what your eyes can identify. A system will just read things based on criteria that you give it. He can't read things like fake outs and stuff like that. Okay? Do you buy in a downtrend though? Yeah, why not? Why not? What's wrong with counter trend trading? Like for example, if I know for me to confirm this is a range, I need one top, I need the second top, I need one bottom, I need the second bottom. Now I know my range is active. In this range, my first buy occurs here. My sell then occurs here as a first sell. He comes down as far as he could, stops at support resistance, exit. Comes back up to the range, next sell. Okay, so there's one counter trend, two with the trend. There's three trades in here. But we don't pull the trigger prior to these four things to identify the markets in a range. Make sense, guys? Because a market can only do three things. They can go down, they can go up, and they can go sideways. You need to be a king at identifying when it's up, when it's down, and when it's sideways. Okay? Anthony, it should have been recorded, so it'll be there. All right. Moving on. Nice little big range there. And then it pops out. Okay, say if you got the bottom of the range here, pops out, holds below, but once it pops out, what does it do? It holds. Okay, so let me draw my support. That's my first support, my very first one. Did he pop out of it? Nope. Did he pop out of this one? Nope. Did he pop out of that one? Nope. So it started to do a range outside of my range, but it was holding. It's holding outside my range. Here's my top here, my top again, and it's holding. And then once it breaks below, you're like, okay, now I can use this line and my tails. Hold below and the sell begins. Okay, and the sell keeps going on and on and on and on. Okay, until things start to turn around again. Now, most markets tend to do this. They go in, let's say if it's an uptrend, an uptrend will then suddenly become sideways. And then from sideways, it decides to either go up or down. Okay, very seldomly does it go up and then down suddenly. There's no flow if it does that. Take a look at this one. This one went up and then suddenly down. But when it went up, he broke above this resistance, and when he came down, he still held. Can we use it as a strategy? Yeah, this is the most basic strategy available out there. There are tons of people just trading support resistance. You don't need a, very complex system to trade. In fact, the best trading that's done out there is actually simple. It's just people make things complicated and they go all cuckoo, I guess. So far so good? Shall we look at the live markets now? Okay, Euro USD live right now. What's it doing? Is it an uptrend? Is it a downtrend? It's a range. Okay, a lot of you guys are saying range sideways. Why is that? What kind of range is this? Fibonacci? Range means flat. Pennant, wedge. Okay, good. Triangle, flag, whatever you want to call it. It's getting my highs, my up moves, and then my down moves are smaller. Then my up moves are even smaller. Then my down moves are even smaller, up even smaller. It's coming into this massive consolidation. This is also a type of range, right? So how do I draw my trend line in something like this? Take a look here very carefully. I take my piece here, my top piece. I take it to the next guy when it comes up. There. I take it straight, honoring the second guy. I'm not going to disrespect him. All this is just tails outside, means nothing. Continue it down. That is your line at perfection. None of this stuff. Let me just connect the dots back to preschool. Maybe we can find a hippo. We can color him in too. None of that stuff, right? Do it well and do it left to right. Okay? On the underside of it, here's a low. Take it to the next low that comes in. Now, would I connect this low? Is that the one? Is this the one? What about this one? This one? And why this one? Why not all this data inside here? Why this one? Yeah, all this was a higher high sequence. All this right here is a lower low sequence that turned. Yeah, that's the stuff you connect. And then higher high sequence again to the top, holds, lower low sequence to here. Just when you have two touches, just extend it out because that's your line. Now you're having a squeeze. Okay? Now, if you know this information and you know how to draw this correctly, wouldn't you say there's tons of trades all over the place? Look how many trades that is. Now, people are usually scared of ranges, but, you know, you give me a range any day, I'll trade it all day long. It's fun. It's a lot of fun. It's because ranges, people don't know what to do and when to do something. All right? So, that's a pennant style drawing with this. This is trend line, but remember, is there any difference between a trend line and support and resistance? This first buy, yes. No, that is correct. This first buy is hard. If you understand it's becoming a triangle, then it's correct. Otherwise, skip that one. Maybe you need those two touches first to understand that it's going to be a triangle first. But if you are able to read it ahead of time, then that can be caught as well. So it is a preference for you. Okay, same thing with the first sell. That's two touches to the top, but you don't have two touches on the bottom. So that comes out as well. All trading happens after these four touches. Okay, so good question, yeah. All right, should we wait for a bull bar or bear bar to get out of this range? Navin, would you enter it? Now, same thing, right? If it pops out like this, what must it do? Should I just hit the sell once it pops out? It needs to hold. It needs to hold. If it holds, we know it's okay. If it retests, I'm a bit worried because retest can go right back inside. But if it retests and holds and does all that stuff up here, a little bit of range or something, then I know, okay, it looks like the markets are trying to choose to go down. Yeah, a close outside means nothing. Be careful with just a close outside. Okay, it's like this. If I put my line like this, my highest point here, wouldn't you say that green candle up there is a close outside? Right? So a close outside is very dangerous. You need the market to hold, which means several candles have to pass by. Okay? All right, guys, so that's all the time I have for today. This thing is recorded. The last one was recorded as well. Thank you, FXStreet, for having me here. I'll see you guys all next month. Hopefully I can bring you guys some different stuff to do. And because I see a lot of you guys are coming in again and again, so we'll do something where we move on to the next topic and a little bit more advanced. So thank you all for coming. Have a wonderful day. Cheers. Bye for now.